Kayla? What's the tea?
Welcome back everyone to the Deadbeat Dads and me, Kayla. Today, in this video, we're going to be talking about where you should store your money. When all of you were younglings, you might have had an allowance, and you would put that money into your piggy bank.
Now that all of you are young adults, you might be wondering, where do I store my money since I don't have a piggy bank anymore?
Well, imagine those piggy banks are full-size buildings filled with your money and everyone else's piggy banks.
When you had a piggy, you could only save money into one account. With all these financial institutions, also known as banks or credit unions, you have the choice of many accounts.
The types of accounts you can get are savings accounts, checking accounts, and money market accounts.
Most banks also offer you a credit card that you can use. Be careful with those buggers. Moving on.
A savings account is basically an account which you deposit money and it accrues interest over time.
A checking account is an account where you can deposit your money and then you can withdraw at any time with either a check or a credit card.
A money market account is basically a better savings account that had higher interest rates and you can withdraw money from it only a few times. The only problem is that the minimum balance for this type of account tends to be very high.
As said before by Kayla, there are different types of financial institutions, and you might be wondering what they are. Well, they are commercial banks and credit unions, and they are very different.
These two financial institutions have their differences, and it's best if you find out which one best fits your financial needs.
Let's start with commercial banks. They are for-profit institutions that have lower interest rates, higher fees, online banking, and also have a lot of locations.
They also offer a ton of financial products, but their customer service can be a little low and bad, and they can be a little wacky sometimes.
Credit unions are very different to commercial banks.
They are nonprofit institutions that have a lot of good things such as customer service, higher interest rates, lower fees, and better rates on loans. There are also some downside with credit unions too.
In order to be a member of a credit union, you need to meet the membership requirements. And not only that, they also offer a few financial options, which means you can't have a lot of accounts.
Banks and credit unions have their own differences, but it's best to find out which fits for you.
One more thing about financial institutions that we want to talk about is fees.
A fee is a charge you get for doing something bad with your account. This can be stuff like ODP and ATM fees. Watch out for these bad boys.
Because banks make more money on fees than they do on interest.
That's all for this video. See you guys next time.